Well, it's been 20 years since we've had a Tata Group company IPO. We have one now. Tata Technologies is the company which is out with the IPO. It's raising money from investors. It is an ER&D company, a research and development company, which offers services to varied sectors in the manufacturing space. Automotive, most importantly, but also aerospace, transportation, etc., etc. I have with me the CEO and Managing Director of the company, Warren Kevin Harris, who's with me to answer questions. Great to have you, Warren, here with us. Appreciate your time here.
Thanks for the interest in Tata Technologies.
You know, you have Tata Elxsi, which is listed from the Tata stable. You have TCS, which is listed, of course, which is a behemoth. How is Tata Technologies different in terms of what it offers? What do shareholders need to know as you come out with this IPO?
Sure. Well, the global ER&D market is about $100 billion, the addressable space for engineering service companies like ourselves. So there's more than enough opportunity for companies like ourselves and the other group companies to continue to grow and flourish. But Tata Technologies is a company that has really distinguished itself in the context of being able to develop turnkey products for the manufacturing sector. You referenced before the work that we do in automotive and transport. You know, we are, as accredited by Zinnov, the industry watch organization, we're the #1 automotive engineering service provider here in India. And we're really the only engineering service provider that has demonstrated its ability to be able to deliver a full vehicle. In 2014, we delivered the Discovery Sport for Jaguar and Land Rover. Everything that you can see and touch on that vehicle was engineered by our company. We've followed that up with flagship EV products like the ES8 for NIO in China. You know, we did the Polestar 1 for Polestar and Volvo in the 2018-2019 timeframe. And more recently, we've developed 2 electric vehicles for VinFast in Vietnam in a record-breaking timeframe, 22 months.
Warren, but in simple terms, for a viewer who's watching and who's holding Tata Elxsi shares, for example, how are you different? Are you saying that they do some part of the vehicle and you do the full sort of the full vehicle from conceptualization, design, all the way through? Is that the difference?
Tata Elxsi is a great company, and it focuses on very discrete components of the automotive value chain, and increasingly it's focused upon software and embedded electronics. You know, we have those capabilities. Tata Technologies has the ability to be able to develop a software-defined vehicle capability for an organization. We have the ability to be able to develop an architecture that will connect various electronic control units inside of a vehicle. So we have those capabilities, but we provide end-to-end coverage of the automotive product realization value chain. So we do concept engineering, we do mechanical design and development, we do software design and development, we aggregate the mechanical systems and the software systems, we do test and validation, and we also do the production launch of the product in the facilities in which our customers have manufacturing capability.
What's the total addressable market every year for you, as you see it?
Well, again, the overall market's about $100 billion. In automotive specifically, it's about $27–28 billion, and that market is growing somewhat exponentially. As
so $27–28 billion is your addressable market?
Is the outsourced market that the automotive industry
delivers. And out of the 100, the rest happens captive? It happens...
Now, out of the 100, the other industry sectors, so you've got aerospace, you've got transport, construction and heavy machinery. You've also got you know, medical equipment and the industrials. So it's...
So 100 is the total addressable market, 27–28 is auto, basically?
It's auto, specifically, yes. That's right.
You know, you are, your dependence on your anchor sort of clients, which is Tata Motors and JLR, has come down over the years. It used to be as high as 70%. I believe it is under 35% now in the automotive segment. I'm focusing automotive because that is by far the largest segment for you. What's the thinking there? Where do you want that number to be at going forward?
Well, those 2 anchor relationships have been incredibly important to us in terms of volume. They've also been incredibly important strategically for us because they've allowed us to incubate capabilities and develop our value proposition at scale. I referenced before the first vehicle that we were given responsibility for was the Discovery Sport. So those customers represent very important platforms for us in terms of growth and also in terms of capability. But we increasingly...
But would the share keep coming down over a period of time from under 35% to...
We expect the trajectory to continue to come down. Somewhat counterintuitively, in the next couple of years, it may bounce up a little bit, given the CapEx commitments that both Tata Motors and JLR have made. But I think medium to long term, you'll continue to see us grow our business outside of the group at a faster rate than we are growing the business inside of the group. But those relationships will continue to be important. One of the things that we do here in India with our graduates, for instance, is that we have the opportunity to rotate our graduates through the production facility at Tata Motors. And through that, we provide a unique experience for graduate engineers. Typically, our competitors can only provide exposure to the digital product, whereas we can provide a learning path that includes both the mechanical product and the virtual.
Warren, your margins are around 18%. For the work that you do with Tata Motors and JLR, it's around the same, or I mean, how does that?
Everything is range bound. So the margins inside of the group are very similar to the margins that we have outside of the group.
Do you feel it's also sometimes it's a bit of a hindrance to be sort of, you know, for the outside work that you do, which is not Tata Motors and JLR, to be seen as a company promoted by auto OEM? Does that hurt?
10, 12 years ago, some of our customers were concerned about the ownership that Tata Motors had inside of our company. But the industry's fundamentally changed. You know, the vertically integrated OEM and supply chain that used to exist has evolved much more into an ecosystem. And as the clock speed of technology change has accelerated, the need for skills and the ability to supply determines decisions in a much more fundamental way than it used to. And so we actually lead now with the relationship with Tata Motors and JLR because they provide proof points in terms of what it is that we can do.
So you're saying when you approach a new automaker, you actually, that's a pitch that you make?
Absolutely, and we invite our new logos to call up Tata Motors and call up JLR and to test and validate what it is that we've been able to prove.
I think that's a testament of how well JLR has done. Tata Motors, of course, has done as well.
Exactly.
Got that. Electric vehicles, is that a large sort of segment for you? In the auto segment, what is the proportion of revenues from EVs for you?
It's an incredibly important part of our business mix. We began the electrification journey some 10 years ago. Shortly after Mr. Tata launched the Tata Nano, he challenged us to come up with an electric vehicle concept that was as frugal in terms of pricing as the Tata Nano, and he gave us an MSRP target of $20,000. We put together a concept that we revealed at the International Automotive Show in Detroit in 2012. And incidentally, that was the same show that Elon Musk revealed the Model S.
Wow.
So we've been part of the electrification journey right since the onset. We've been involved in every aspect of JLR's journey, TML's journey, the recent ICE to EV platform conversion work. We've been an integral part of that. And we've built up a portfolio of electric vehicles that really lay testament to the capabilities that we represent. And if you look at the pivot in the industry, you know, we're going through a once-in-a-generation shift towards autonomous driving, towards connected services, towards electrification, and towards shared. And the capabilities and the IP that we've built up now over more than a decade has really informed the market position.
So again, to pin you down to numbers, EV as a percentage of the overall automotive revenues, how much is it at right now?
If we look at the new projects that we are winning, more than 70% of the new projects that we are winning has some form of electrification in.
But these are not electric vehicles per se. I mean, this would be...
Well, our portfolio extends from providing services that the OEM uses as a complement to the work that they do.
Okay.
We stand up offshore development centers, and then we also undertake turnkey responsibility for complete products.
For new products.
For new products.
So 70% you're saying of the new work that you're getting is somehow connected with
electrification. Absolutely.
In that sense. And is this higher margin work? Kevin, this new work on the electrification side, or it's not? I mean,
it's typically range-bound again. So our margins in the electrification space are very similar to the margins that we've traditionally enjoyed in the internal combustion sector of our business.
You mentioned Mr. Musk and Tesla. Are they a customer?
We have a healthy mix of new energy vehicle companies and traditional OEMs, and we like to work with the most progressive companies in the space. And so,
why is that hush hush? I mean,
we're bound by confidentiality agreements.
Okay. But they are a client. I mean, I take to understand that they are a client. Are they a significant client, big client? Because I only ask that because they have been sort of at the forefront, leading this electrification revolution in that sense in the automotive industry. So.
They're a company that we've followed very closely over the last 12 years. We do work with them, and we have ambitions of being able to do more with them in the future.
Okay. When you talk about electrification, China, for example, is far ahead than any other part of the world in terms of any other region of the world in terms of electric vehicles, etc. So, I mean, how does that work? Are a lot of your clients Chinese companies, or are they? I mean, for example, Europe perhaps would be ahead of the US. Which are the important geographies in that sense?
China is very important. And we went to China in the 2014, 2015 timeframe. One of the things that we are known for is our lightweight body capabilities. An essential condition of an electric vehicle is having a lightweight body. In order to be able to extend range, you've got to be able to develop a body structure that is crash-worthy but is light, and so we use that as the catalyst for building business in China. And I referenced before the work that we did with NIO. We went to work with NIO when William Li had 35 employees, and we were essentially their ER&D organization when they first formed. And so we've been part of the electric vehicle market there since that time, and the experience that we've capitalized there, we're not only using to continue to build out our regional presence, but also taking that experience and using that in Europe and in North America and indeed here in India as well. And I think that's a testament to the fact that we're a global company. We've got 19 different delivery centers. We're very proud of our position here in India. But we practice very much a balanced onshore-offshore proposition, and we've developed a topology of delivery capabilities that allows us to tap into specialist resource pools in different parts of the world.